Hello dear students, good evening. Come on, quickly join in everyone. Good evening. Khammagani. Is it audible? Is it visible? Just write in the comments. Our team will also let me confirm. Is it audible and visible? Yeah, definitely it's audible and visible. Come on, quickly join in everyone. Bonsoir. Buenas nachos. So today we are going to discuss an editorial from Indian Express. It is about Reserve Bank's two reports. One report on trends and progresses in India in banking system, and other is Reserve Bank's report on financial stability. These are the two reports that have been published recently in the last 4-5 days, right? That is Tuesday and Wednesday. So dear students, today we are going to understand one editorial which is economic one, right? And from that again we are going to learn many vocabs. But before I begin the journey, let me remind you the very fact that tomorrow, that is Sunday, you will have a test of vocabs from these week's editorials, right? So this week there were almost 5 editorials discussed and one weekly revision that we are taking care of today. So now let us continue the journey. I hope you will prepare yourself in a better way for tomorrow's exam. So dear students, write in the comments, ready, come on. So today we are going to have a discussion which will take place English to English. So this time there is a mind map which will give you an idea of the same. Reserve Bank reports trends and progresses of banking in the year 2020 and 21. Indian banking system has weathered means survived the COVID storm in a way that was more than expected, right? So it's a good performance that they are referring to. At the same time, asset quality has also improved for both private and public sector, and both financial metrics have also improved. So when you say financial metrics means parameters based on which you measure the performance of a specific segment or industry or sector. So this has improved. At the same time, when Omicron is also burgeoning or rising or growing, editorial says that banks need to be vigilant, that is careful observant of the trends taking place in the banking sector, in the economy. Plus, when performance is improving or is expected to improve in terms of asset quality, in terms of financial indicators, everything, but at the same time bad loans may also rise. So both the good things and bad things are going to take place at the same time. So for bad things we have to be vigilant, and for good things we have to be cheerful. That is how the passage proceeds. Dear students, are you able to understand whatever I am discussing? Then write in the comments clear so that I can continue the journey. Capital positions. So banking sector needs to bolster means strengthen. It has to make it a stronger support base of capital. At the same time, we should also be able to absorb means include. What include? Potential slippages. Slippages means minor failure or kind of minor failures which you have to manage. Plus, you also have to sustain the credit flow. So the amount that you should be able to give to the market in the form of credit should also grow and should also be there on a sustainable level, so as to keep running the cycle of banking throughout. So let us go to the second part of this mind map. Gross non-performing assets. In the year 2018, they were 11.5% of the total loan amounts. And you can see there is a downward trajectory. Trajectory means path. So there is a gradual reduction in gross non-performing assets, which is a very good thing for Indian economy, right? Previous year it was 8.2%, and this year March 2021 it has been reduced to 7.3% in terms of bad loans. So at the same time, when these are the actual data, there are also data available which are provisional. Dear students, provisional data means the one which are not actual but which are almost nearby or near to actual data. And that is a judgmental data based on some assumptions, some conclusions, some analysis, right? So it is as good as accurate data. Provisional data says that there are chances that further moderation, means further reduction or averaging, will take place in terms of these bad loans, and it will go down to almost 7% from even 7.3%, right? So September 2021, and there are certain reasons. First is lower slippages, means lower loopholes, lower failures, and at the same time write-offs 2.08 lakh crores. So almost 2.10 lakh crores of amount has so far been written off from the accounts of various banks. Dear students, when we say write-off, means to cancel from the books of accounts. So when you reduce certain amount, eliminate certain amount from your balance sheet, from your financial statements, it is called writing it off. Okay, so dear students, are you able to understand? Is it audible? Even our team members will confirm. Yeah, it's audible and visible. And recovery source channels. See, when we have bad loans, we also want some institutes or agencies or intermediaries or tribunals who would support us in the recovery of the bad loan, right? So there are certain channels: Lok Adalats, Debt Recovery Tribunal, Sarfasi Act and IBC. But overall recovery percentage has been reduced from 22% to 14%. So it's not a good sign, despite the fact that there are 4 different mechanisms or instruments which are we expecting to help us, but right now it is not turning out that way. That is also the case. And gross non-performing assets, now for future forecast is that could rise up to 8% by September 2022, that is in the coming year's time. Maybe these gross NPAs would rise, and that is not a good thing. And at the same time, if the economy worsens, means if the performance of the economy further deteriorates, then this percentage may rise to 9.5%. Again, it's a very bad sign if it happens that way. So that is how the report has been discussed in this editorial. Now, dear students, if you are able to understand each and everything that I am discussing so far, or I have discussed so far, then let us go and jump into the translation. But again, translation will take place English to English only. So I am translating English paragraph into English paragraph. That is how we are going to proceed further. So write in the comments next. Everyone, write from Bhavesh. Everybody, write from Roshni. Naresh. Okay, so everyone is active. Maybe you are active in comments, but I could not read your name. That's a different story, but I know all of you are active. Keep liking the video, keep sharing the video. Sharing and growing take place together. So let us go into the journey. Dear students, banks have fared. Fared means performed better than expected in pandemic, but there are also signs of stress building up. Dear students, at the same time when banking sector is performing well, there are certain factors or the certain signs where stress is also building up because of negative elements in terms of COVID-19, in terms of recession, in terms of slowdown of economic activity. So going by the Reserve Bank's report on trends and progress of banking in India. So if you consider this report for the year 2020-21, right, which was released on Tuesday, Indian banking system appears, means seems, looks to have weathered, that is survived the COVID storm better than was expected. So here if you see this report of RBI on trends and progress of banking sector in India for this current year, then it can be said that COVID-19 storm has been tackled very well by the banking sector, right? Now let us go further. The asset quality of banks has improved over the past year or so. So even quality of the asset owned by the banks and those which banks have taken or might have taken in the form of guarantee, even the quality of those assets has increased. and on various other financial metrics means different parameters. Also, the performance of the banks, both private and public sector, has improved and banks are faring better than before. So, both private and public sector banks are performing more than expected standards are there, right? So, let us go further. However, there is a cause for concern. See, till now the passage tone was completely positive, praising and all hopeful and cheerful, but now there is also cause for concern. Even with the economy recovering to its pre-pandemic levels, means dear students, when there was no COVID-19, when there was no coronavirus, what kind of levels we used to have in terms of economy? These levels have started being reached again, right? And at the same time, the threat of Omicron notwithstanding, at the same time, however, the threat of Omicron is also there, notwithstanding means in spite of all these things. The report points out that banks must remain vigilant, that is heedful, careful of the evolving or emerging or growing risks. So, we have to be careful of the same, and that is how when there are good points in our favor or in banking industry's favor, there are certain points where banking industry needs to be careful, both private and public. It is said as per the Reserve Bank's report on trends and progresses of banking system in India for the year 2020 and 21. So, dear students, if you are able to understand whatever I am discussing, write in the comments next so that we can continue the next paragraph. In fact, according to the Reserve Bank's Financial Stability Report, which was released on Wednesday, dear students, till now we have discussed the report released on Tuesday, that is trends and progresses of banking, and now we are going to discuss the report published by Reserve Bank on financial stability on Wednesday. Banks may well witness a rise in bad loans. Over a period of time, non-performing assets and bad loans may rise in the coming year. So, this is a negative message being given, and not just negative, this is the reality that may turn out over a period of time. Moreover, in addition to the same, the withdrawal means removal, cancellation of the monetary, that is fiscal, money related, right, and fiscal, that is financial measures, means that banks will need to further bolster, means strengthen their capital positions, right. So, at the same time, when now benefits or support systems or reliefs provided both in terms of money and finances measures, these measures if they are withdrawn, then banks will need to further bolster, that is make strong what their capital position to absorb, means to include, means to tolerate. What to tolerate? Potential slippages, that is failures, as well as to sustain the credit flow. So, at the same time, when government used to provide certain incentives, what if those incentives are withdrawn? In that case also, banking sector has to bolster banking sector's, all banks' capital position so as to be able to survive and tolerate and bear potential slippages, that is failures, as well as to sustain the credit flow, means the flow of finances both inward and outward should be maintained well. That is what the report based on financial stability published by RBI on this Wednesday says. Let us go further. At the aggregate level, that is overall, combined all the factors, banks' gross non-performing assets which had begun to decline before the pandemic, GNPAs, that is non-performing assets which had begun to decline even before pandemic, right, have continued that downward trajectory. Trajectory means path, means percentage of bad loan is decreasing year by year. Even before pandemic it used to decrease, and even now it is in the decreasing mode, that is decreasing or downward trajectory or path or journey or road. Bad loans stood at 7.3% at the end of March 2021, means 6 to 7 or 8 9 months ago. In the month of March 2021, bad loans percentage was 7.3%, down from 8.2% in the previous year. As compared to the same in the previous year, percentage of bad loan was 8.2%. So there is almost 1% reduction in the in the amount of bad loan, and that is a very good thing. That is a positive sign that they are trying to talk about. Gross NPS had earlier peaked at 11.5% in March 2018. So 3 years back, down the line, no, down the line refers to future, but I am referring to the past. So in the month of March, that is the year 2018, percentage of gross NPA was 11.5%, and now in the year 2021 it has almost come down to 7.3%. That is a very good sign of improvement and progress in the recovery system. Now the provisional data is the data which is not accurate but near about accurate, suggests a further moderation, means further reduction or averaging. This year, bad loans are estimated to have declined further to 6.9% at the end of September 2021, right? So even in the month of September 2021, that is 2 months ago, bad loans are estimated to have declined to further to 7%, right? Right now, dear students, on this day in the month of December, when we are discussing this passage, it means to say that in the month of September, and before that, it was expected that in the month of September 2021, the percentage of bad loan would further come down to 6.9%, right? However, this improvement is not only due to lower slippages. See, this is improvement from 11.5% to 6.9% reduction in the span of 3 years is of course a sign of improvement, but not just because of lower slippages, that is lower failures, but also predominantly, that is mainly due to write-offs. So cancellation from the bank accounts of the bad loan, and that is almost 2.08 lakh crore. It's a big amount, it's a huge amount. So these two are the reasons for the improvement in the banking sector's performance in terms of bad loans, right? And policy measures taken by the central bank to lessen the fallout means adverse outcome. Dear students, when you refer to this word fallout, it means anything you do which is negative, and if you have to face the negative consequences of the same, then it will be called fallout, right? So right now they are referring to this point that, and policy measures means policy steps or actions taken by the central bank to lessen, that is reduce the negative outcome from the pandemic, such as the asset classification standstill. Dear students, standstill means there is no upward graph, there is no downward graph, there is a pure, sheer, complete, total, absolute stagnation. That is referred to as a standstill. So in terms of asset classification, whether it's a good asset, it's a bad asset, it's an NPA or what, that classification process has also become a standstill one, right? So there is no progress in that as well. So that is what the report says, right? So there are many good points, there are many bad points we have to be vigilant of. Okay, let us go further. In fact, according to the data presented in the report, so whatever data were presented in the report, recoveries from loans, see, recovery is the main point. We are ultimately focused on various laws just because we want to recover our amount that we have lent to various customers, whether personal loans, whether car loans, whether business loans, whether commercial loans, whatever type of loan, right? Even educational loan, right? So recoveries from the loans that have soared means become worse or difficult. Okay, so recoveries from the loans that have become difficult through all channels such as Lok Adalats, DRT, that is Debt Recovery Tribunal, Surfaci Act and IBC. So recoveries have actually declined. See, recoveries are supposed to increase, then it's a sign of improvement. But right now, as per the paragraph's wording, it is being said that recovery percentage has actually declined from 22% in 2019-20 to 14% in 2020-2021. So there is almost 8% of reduction in the amount that you used to or you could recover, whether bad loans, whether NPS, whatever type of loan that you could not recover, and there is a percentage of recovery which is reducing, but we expect it to increase. So there is again a negative performance that is being marked here. On the other financial indicators, see, apart from recovery, there are other indicators which also decide the health and well-being of the banking industry. So what are the factors? Banks have seen an improvement over the past year. So there are certain improvements which banks have been able to witness. Dear students, are you able to understand everything? Now you must have observed that in the last 2-3 weeks, whenever I take up videos for English to English conversation, I am not going slow. Slowly and gradually I have increased the speed of speaking so as to be able to deliver at a certain pace where your mind should also be adjust or be able to adjust so as to grasp maximum. So are you able to understand? Write in the comments clear if you are able to understand, and if you are not able to understand, you should raise queries. Sometimes it's a premiere video which we have shot in advance. In that case, even though you comment, we are not able to answer. Similar situation you must be witnessing today, but that's fine. You can comment offline after the video is over. If you comment, I definitely go through all the comments and try to reply to all your comments as early and as quickly and as fast as possible. So let us continue the journey. On other financial indicators, banks have seen an improvement over the past year, and that is a very good thing. Capital buffers means minimum amount of capital that you are required to keep as a backup. So capital buffers are also up. So dear students, if the capital buffers are up, means huge portion of your capital would remain invested in some of the activities which you would not be able to utilize. So it's not a good sign, as we can understand. As are provision coverage ratios. So provision coverage ratios means if you have provided a loan of 100 crores, maybe you are expecting 10%, that is 10 crore loss may be possible. So you have to create a capital buffer for that too, right? However, there are signs of stress building up. At the same time, when there are signs of improvement, there are also signs of stress, distress, worry, anxiety building up. Let us go further. Loans that are classified as SMA2, that is special mention accounts, where the principal, that is the loan amount, or the interest payment was overdue, that is not paid for 61 to 90 days. In that case, that asset would be classified as special mention accounts too. And loans that are classified as SM2 have risen. So these kinds of loan amounts or loan categories and amount for the same which can be classified as SM2, these categories amount have increased so much. Signaling means indicating what? Indicating impounding that is likely about to happen in stress. So upcoming stress is being indicated by this classification of SMA2 category. Let us go ahead, dear students. Stress is also building up in the MSME category, medium and small and medium size industry. So there is also a stress building up there too, right? And bad loans may in fact take a turn for the worse in the months ahead. Means bad loans may become even worse. If they become even worse, then the problem or tension mounts and increases manifold, right? So as per the financial stability report, GNPS could rise to 8.1% by September 2022. So in the upcoming year, maybe percentage of the gross NPS could rise to 8% under the baseline scenario. When you say baseline scenario, means if you consider all the factors to be normal, then it is called a baseline scenario. So considering that, it is possible that in the coming year, percentage of GNPS would rise to 8.1%. If the economic outlook means perspective or view, how you see it, right? Worsens means becomes even bad, then they may rise further to 9.5%. So in that case, percentage of GNPAs would rise to 9.5%, and that is how it's a point being discussed which is not in our favor, which we have to be vigilant of. And now, banks may thus, that is therefore, need higher capital infusion. When you say infusion, means inflow. So when you need funding for the business and someone provides you that funding, then it is called capital infusion. Big amount of money flowing in, right? So right now what we need is higher capital infusion so as to be able to achieve or meet credit requirements and deal with the challenges. So that is how we would be able to meet all the requirements of finances, capital of the economy, and at the same time deal with the challenges. It can be in the form of pandemic, it can be in the form of recession, it can be in the form of global warming cost, right? So that is what we have to manage. And after all, the editorial wants to say that how quickly credit flows through parts of the economy, means different parts of economy, how they are able to flow credit or finances will have a bearing, that is will have an impact, will have an influence on the recovery. So if the credit flow is very good in all the parts of the society or the country, then chances of recovery or chances of improvement will increase automatically, right? That is what it means to say. So that was the editorial, which was purely economic. And before going for the tone of the passage, we would also like to go for the vocabs. So if you are all ready, then write in the comments RFV, that is ready for vocabs. Quickly write in the comments if you are ready for vocabs, so that I can continue the next round of discussing all the vocabs, and then we will also go for the tone of the passage. Dear students, in the passage all the good points, all the bad points have been taken care of simultaneously. It is not a biased tone of the passage, that is for sure. And in economic terms, when there is no bias, generally the tone of the passage is analytical. So even today, after we are done learning all the vocabs that we could derive from this editorial, we will discuss the tone of the passage. So are you all ready for vocabs? Okay, everyone has started writing in the comments, that is ready for vocabs, RFV. Okay, so let us go further, and before we begin the journey of vocabs, there is a current affairs Gamasan, that is special MCQ session that will take place at 5 p.m. that is today itself, in just 1 hour, and that is how okay, so that is how session has already taken place, right? Definitely it's a premiere, so I should not be marketing the same and again. But in case if you haven't gone through this video, which was conducted live at 5 p.m. today by Sandeep sir, then you should definitely go through the same. So dear students, let us continue the journey of the vocabs. Weather. So come safely through, that is survive, that is ride out. So when we are premiering a video, many a time it happens that we are putting a slide of the video which has already taken place, but nonetheless it's just a 2-hour gap. So in case you haven't gone through this video, you should go through this video. So dear students, metrics, a system or standard of measurement, that is parameters. Vigilant means keeping careful watch for all the possible dangers and difficulties. Observant, circumspect, leery or heedful. Evolve, develop gradually or mature or unfold, that is metamorphose or transmogrify. Bolster means support or strengthen, reinforce, buttress, revitalize, invigorate, to make strong, stiffen and augment. Absorb, take up the attention of, interest greatly, and preoccupy, engross means to completely include within your system, to be able to tolerate, that is enthrall, intrigue, immerse or amuse. See, when you are completely involved in the work you are doing. See, recently, just 2 or 3 minutes ago, when I was completely involved in just explaining all the vocabs and the editorial, I did not have any sense of time. This is the time when I am shooting, and the time of publishing of this video, there is difference. and I was so absorbed into this stuff that I had no sense of time, and that is how it was a fun part for all of you. Let us continue. Slippage, failure to meet a standard or deadline, the extent of this, right? Aggregate means formed or calculated by the combination of several separate elements, total, gross or accumulated, that is comprehensive composite. Gross non-performing assets. After 90 days, generally all the loans which are not paid off properly will be classified as gross non-performing assets. So for your reference, it has been kept there in the form of PDF for all of you. Trajectory means the path followed by a project or projectile flying or an object moving under the action of a given force. Okay, so course, path, ambit or orientation, or tack or approach, journey. Moderation, the avoidance of excess or extreme, especially in one's behavior or political opinions. Restraint, temperance, leniency or fairness means not much high, not much low, on the balanced side, that is average, middle path. Predominantly, that is mainly, for the most part, chiefly, principally, largely, by and large, to a great degree. Write-off, cancellation from an account of a bad debt or worthless asset. Fallout means the adverse result, the result which you do not want to see. That is a fallout, because it is a negative one. Standstill, a situation or condition in which there is no movement, no activity, halt or dead stop. Soured, having become acrimonious or difficult or bitter, that is not able to digest. So our team will again confirm, is it audible completely? Yeah, definitely. Capital buffer, mandatory capital financial institutions are required to hold in addition to other minimum capital requirement. Say for example, out of 100 you have to maintain minimum 10 crores of capital as a backup. Again, in addition, if there is a 5% one more requirement, then this 5% will be referred to as capital buffer. Signal means instruct to do something by means of gestures or signs, that is beckon or nod or gesticulate or motion, kind of gesture. Impending means forthcoming, threatening, significant, about to happen. I can also use the word imminent. Infusion, the introduction of a new element or quality into something. Have a bearing, to affect or influence a decision, so have an impact on. So this is how the editorial so far has been discussed. And dear students, tomorrow again we would be discussing all the editorial words from this week's editorial, right? So tomorrow again we are meeting at 7:30 p.m. sharp in the evening. Definitely you should come and learn all the vocabs, and that is how the test of your vocabs will be conducted. I think initially in the video I had said that tomorrow you have a test. Again I was lost in time. Tomorrow is Saturday, so your vocabs test is not tomorrow but the day after tomorrow, that is Sunday. So you will have a test of vocabs on Sunday, not tomorrow. Okay. So definitely you know many a time we shoot videos which are not live but which are not less than live. These are the premiere shots which we have to shoot in the afternoon many a time because of other academic schedules. But just because we want to give the best, maybe in the form of live 90% and 10% in the form of premieres. So I hope you are receiving the maximum benefits from all these videos and efforts made by all of our faculties. So dear students, from now on you can see there is a new form of thumbnail that our team has developed. So I hope you like this one too, right? So now the tone of the passage is purely analytical. And when you say analytical, it has both positives and negatives. That is how the tone of the passage is. So I hope dear students you enjoyed the video throughout. Of course today I was lost somewhere in time zone where I had no sense of the timing of the shooting of the video and other lectures taking place live. But I hope you get the purpose that we are here for. Thank you. This is Abhay Shah signing off. Bye bye and good night.